Okay, so today's only going to be a short one. We're just going to highlight the New York PM session trade that we took yesterday. For some reason I cannot get the executions for this trade to show. I can for this one, as you can see here, but for some reason they won't show up here. But I will just show you here. So 6:30 on the 26th, that's London time because I'm in London. However, New York would equivalent to 1:30. So the entry is here. It's all here. And you can see the sell limits here. Yeah, the trade's all here, as well as London's trade. So we'll go here. So the basis of this trade was just off an SMT and a 5-minute inversion fair value gap. You can see the SMT, hold on, here. So ES made a lower low, and then NQ made a higher high. So that was the SMT there. A 5-minute inversion, this box here is the inversion. We entered at 1:30, 6:30 London time, so it would have been this candle here. So my thought process through this was SMT inversion, then we got a break of structure to the upside here. We just draw a line there for that. So yeah, break of structure. But I entered before the break of structure because I just knew after this inversion and this strong push up that we were going to carry on going towards buy side. So there's the inversion. Our entry would have been here at 6:30. Our stop was originally here, and then we were targeting that. If you didn't want to take the inversion, you could have taken this little fair value gap here on the 1 minute there. So that's your unicorn, break of structure, fair value gap, pull away. My only issue with this trade was this choppy price action here between 1:30 and 2 o'clock. But what normally tends to happen is when it reaches 2 o'clock, it will just start to expand higher because of the new hourly fair value gap. What am I talking about? The new hourly candle, which it did do here, expanded higher. So here you just want to be patient. You want to be patient with every trade you enter. And we trailed stops. So my first stop was trailed to underneath the inversion. And then I think once we hit 2 o'clock, I brought it up to break even, which would have been around here. So it was a free trade by then, and then we just spooled higher here, took out buy side. So it's a very simple trade. Don't overcomplicate things. Don't try and throw in, like, a lot of people, they'll just see like volume imbalances here and be like, they'll try to catch the bottom volume imbalance. It doesn't make any sense. Just take what's simple, take what works, take what your model allows you to take. So that's that trade. They're very simple. There's not really much else to talk about here. Very simple trade. And then we've got our London session trade here. So let me explain this. We had equal lows on ES here. If you look up here, it will say low, equal low, 4 equal lows. So I was waiting for that to get taken out, which it did here. And we'll say I was looking at this 15-minute fair value gap, which we didn't tap into, but that is what I was looking at that point. So now we'll go to the 1 minute. Here's the 1 minute. So where's our trade executions gone? Anyway, you could see the executions. I don't know where they've disappeared off to. Oh, because we took it on NQ, not ES. Here we go. So here's the trade executions. It was a simple silver bullet. I mean, we had SMT here. Let me close this for you. We had SMT. Okay, so NQ was looking stronger. Then we had this breaker structure here. And then we had this silver bullet fair value gap as why it entered off of. So we did this. My stop was below this here. And then we were originally targeting these highs, but we had a partial, this line here, which you can see here, partial there, and then we had a second TP here and our final TP here, which we didn't end up reaching. So yeah, we came in off this fair value gap, took our first partial, of which I then moved my stop to break even, which was around here. So this candle stopped us out, but it stopped us out in profit, in like a small amount of profit. So whenever you hit a first partial, you want to move to break even. Always move to break even. Keep your profits in your pocket. Pay the trader. If you're not paying the trader, who the fuck are you paying? Not yourself. You're paying the market. So move your stops when you hit your first TP. Because otherwise shit like this happens and you get stopped out like a dickhead, and then you look like a dickhead. Anyway, my bad. So that was today's trade. Two very simple trades. London session silver bullet. Silver bullet starts at 3 o'clock, which is here, and ends at 4 o'clock, which is here. There's your silver bullet. Fair value gap. First fair value gap within that hour of the silver bullet. We took it and got our first partial. Then our trade and stop loss got hit. I think on this candle, yeah. So there you can see the executions. All the executions are there. There's no replay mode. Market is open. So yeah, it's all here. So two very simple trades, easy trades. Keep your shit simple. Stop doing all these fucking adding every single concept that ICT decides to tell you. If you're an ICT trader, you don't need 74,000 concepts to be profitable. You just need simple unicorn. Have the unicorn or the silver bullet, or integrate both into your own model. It's simple. Keep everything simple. Right, so yeah, I'm going to stop waffling now. They were both the trades we took, two very simple trades that I'm very happy with. I think this was a 1.6 RR. This was a 2R or a 1.8. I think it was a 2R. Yeah, that's it from me today. If you want any updates, you can follow my Twitter profile, Lemmy, here. It's in the description if you need it. And yeah, have a good day, and I'll talk to you in the next one.